Hello everyone, my name's Derek Pass. I'm an Asia investment specialist with Premium China Funds Management. Today I'd like to provide you all with an update on what's been the effect of the coronavirus on four of our key themes that have informed our portfolio choices over the last couple of years. Firstly, looking at consumer upgrade. Now, as you're all well aware, one of the key drivers for the Chinese economy over the last 30 to 40 years has been the urbanisation process and the growing middle class in China, and hence the power of the Chinese consumer. Where we've been focusing more in recent years has been on the consumer upgrade, or the more affluent parts of the consumer, of the middle class, and their spending habits. So what we've been seeing in China is growth as far as spending for lifestyle type purchases. And a good example of this is baijiu, or white liquor. Now, we've got holdings in two companies that are involved in this, Quiqiao Maotai and also Wuliangye. And if we look at the price of Quiqiao's premium product, we can see that yes, the price did dip during the coronavirus, but now it's back up to pre-virus levels, trading at around $500 per bottle. And another metric we look at is the price of sports shoes, and we can see that they've continued to rally as well, so trading around about $70 a pair, which is good news for our holdings in Baosheng, which manufactures the likes of Reebok, Adidas and Nike in China for Chinese consumers. The second theme I'd like to give you an update on is online services, in particular online food delivery. It's been interesting to observe that throughout the coronavirus we've actually seen a pickup in online food delivery. So where we are now, we're actually running at a level 20% above where we were last year. This is not just a Chinese theme, of course. We're seeing this sort of pattern of emerging globally. For us, it's good news for our holding in Meituan. So Meituan is one of the two big players in the Chinese online delivery market. Meituan's got about 40% of the market. It's got about 400 million customers. We prefer them because it's not just food that they deliver, they're branching into other products as well. The third theme I'd like to give you an update on is the education sector in China. Now, this is a long-term structural change in the sense that more and more Chinese are getting more and more tertiary education. Now, it's been fascinating to watch what's been unfolding this year with the COVID-19, in that we're actually forecasting a 25% increase in student numbers this year. Now, this is in part due to the impact of the COVID-19, in the sense that what we've observed is there has been an uptick in unemployment in some sectors in China, particularly manufacturing for exports. Now, what the Chinese government's response to this has been to increase the annual quota of available positions for tertiary education, as well as increasing the subsidy available for students. So from our perspective, all good news for China Xinhua. The fourth investment theme I'd like to give you an update on is the rollout of 5G in China. So from our perspective as a fund manager, it's not so much about investing companies that are involved in producing 5G enabled phones. It's more the companies that are involved in producing what goes inside those phones and other 5G enabled devices, as well as broader service companies in the 5G ecosystem. Now, the impact of the coronavirus on 5G has been actually to speed up, or it will be to speed up the uptake of 5G enabled devices. The reason for this is, as part of the Chinese government's stimulus package, is the building of approximately 500,000 to 600,000 5G base stations across mainland China, which is good news for the uptake of the speed of the uptake of 5G. Well, that brings to the end my segment. So if you do have any questions, please feel free to get in touch.